Hello and very good morning to all our viewers. This is WION Volatile. I am Sumit Chaturvedi. Let's see what is making headlines in the world of business this morning. Saudi Arabia to spend billions of dollars to stimulate economy as it moves to reduce dependence on oil. $54 billion to be injected. New airlines set to take off in Indian skies. Air Deccan and Air Odisha to get 10 slots at Delhi airport. Japan's Kobe Steel is all set to announce its second quarter results amid a scandal that has engulfed the entire country. And Sensex opens in green. Sensex is up more than 100 points. Nifty is also up. And straight to our top story, Saudi Arabia is spending billions of dollars to stimulate the economy at a time it wants to reduce dependence on oil. Saudi Finance Minister said $54 billion has been allocated to stimulate the private sector. Saudi Finance Minister stressed it is normal for growth to decline before accelerating further in line with economic reforms undertaken by the Kingdom of Saudi Arabia. The Finance Minister of Saudi Arabia, Mohammed Al-Jadaan, has affirmed that growth of non-oil private sector will accelerate with the continued stimulus package for this sector, and it expects to announce new stimulus packages before the end of the year. This will be in consultation with sector to create new jobs for Kingdom citizens. Saudi Finance Minister stressed it is normal for growth to decline before accelerating further in line with economic reforms undertaken by Saudi Arabia. Now, in an earlier interview with Bloomberg, Saudi FM said Saudi Arabia is planning a more fiscal expansion in the 2018 budget than ever planned. And Japan's Kobe Steel is all set to announce its second quarter results today. Investors are keenly watching if Japan's third largest steel maker can meet its earning estimates. Uncertainty and Kobe Steel's profit forecast is in question, and the scandal is the main reason why forecast has been questioned. Kobe shares have lost a third of their value so far. In the last 3 weeks alone, its market share has dented, and Japan's steel major is losing to competition very fast. Kobe Steel will announce its second quarter results today. And Kobe Steel can meet its earning estimates? That's a question which is being asked by analysts. Uncertainty created by employees falsifying product data prompted Kobe Steel to consider withdrawing the guidance. And it is not just the steel maker that's having trouble figuring out how the crisis will affect its bottom line. Mitsubishi UFJ Morgan Stanley Securities Company has withdrawn its rating on stock soon after the scandal broke. Kobe Steel scam has hit planes, trains, automobiles so far. While most of 525 companies affected did not find any safety problems created by data falsification, the manufacturer has said it will help pay for linked cost. Kobe Steel also lost Japanese industrial standard certification at one of its factories in Kanagawa, and others are at risk as the government expands its inspection. Now, business units implicated in the crisis include the iron and steel, copper and aluminium, and machinery departments, which account for more than half of company's revenue. Now, over the past 2 weeks, Kobe Steel announced it had fake data for other products, ranging from steel wires, materials, and other things used in DVDs and even LCD screens to machinery parts and heavy plated metal. Customers, including Kawasaki Heavy Industries, have said they might seek reimbursements from Kobe Steel if their customers start asking for replacement products or compensation. Kobe Steel said it will use an external investigation committee to get to the bottom of what happened. While many of the falsification problems occurred in Kobe's facilities in Japan, data fudging for products in Thailand and Malaysia was also uncovered. And beginning with India stories, where after a few recent tragedies, there is a need being felt in Indian Railways to expand in a big way, and that is exactly happening. Railways is now looking to invest over $150 billion over the next 5 years, which would help create 1 million additional jobs. Minister of Railways Piyush Goyal has said. Goyal, who took over as the rail minister after a cabinet reshuffle in August, said he was trying to give national transporter a new direction. Goyal said his ministry was also compressing the time taken for completing electrification of railway lines to 4 years from the earlier plan of 10 years, which would help cut costs by around 30% for the loss-making railways. Well, this electrification initiative would help save national transportation around 10,000 crore rupees per annum on fuel bill. Railway Minister Prabhu had also secured a debt funding worth rupees 1.5 trillion from Life Insurance Corporation to fund various projects. It is not clear whether Goyal's $150 billion is part of Prabhu's 8.5 trillion investment. Prabhu is now the Commerce Minister. And India is soon going to see new airlines taking off in skies as Air Deccan and Air Odisha. They will get a total of 10 slots at the Delhi airport. The new slots will be received under Regional Connectivity Scheme of Indian government. Together, Air Deccan and Air Odisha, they were looking for 16 slots for their proposed RCS flights from the airport here. After extensive stakeholder discussions, DIAL, Delhi International Airport Limited, has agreed to provide a total of 10 slots to the two airlines. Each airline would get one night parking slot. So new airlines in India are getting slots under RCS. RCS is Regional Connectivity Scheme. Air Deccan and Air Odisha, they will get slots in New Delhi. And RCS is Regional Connectivity Scheme started by Government of India this year. And new airlines, these Air Odisha and Air Deccan, have yet to announce dates. Each airline would get one night parking slot too. And new airlines will get 10 slots at Delhi airport. And Delhi Airport is operated by DIAL, which is Delhi International Airport Limited. It is a joint venture company. It is the busiest aerodrome in the country. In the winter schedule, it will offer around 1,300 slots to airlines. Air Deccan and Air Odisha are awaiting their scheduled commuter air transport services licenses under RCS. And Indian macroeconomic conditions are boosting the inflow of foreign capital into the country. Foreign investors have pumped in close to $3 billion in the Indian capital markets so far this month due to high nominal and real yields and stable macroeconomic conditions too. Interestingly, most of the funds have been infused in the debt markets. According to latest depository data, FPIs or foreign portfolio investors have invested a net sum of around $3 billion during October 3 to 27. This follows a net outflow of 20,000 crore rupees from the capital markets last month. Prior to that, they had pumped rupees 1.7 lakh crore rupees in the preceding 6 months. Another major reason could be due to increase in limits in Indian bonds by Reserve Bank of India and Capital Markets Regulator, Securities and Exchange Board of India (SEBI) by rupees 14,000 crore for October-December 2017. FPIs or foreign portfolio investors, which had earlier exhausted their limits in Indian government securities and corporate bonds, tapped this opportunity and rushed to buy these securities. And the recent bank recapitalization plan unveiled by government will impact the economy positively and is likely to propel credit growth by up to 700 basis points or 7% to 15%. As consequence of this push-up, GDP numbers will go up to 7% in the next fiscal, says a report. The government recently unveiled a 2.1 lakh crore rupees, representing 1.2% of GDP, recapitalization package for public sector lenders. This will be injected over 2 years. The capital infusion will be funded through 3 sources. Rupees 18,000 crore from budgetary provisions, 58,000 crore from market as government dilutes its stake, and 1.35 lakh crore through recapitalization bonds issued by government. Now, according to a report by brokerage firm Ambit Capital, lending growth at banking and across banking system was estimated to be at 8% in 2018 and 19. However, with recent capitalization plan, recap plans in play, the credit system is expected to grow to 12 to 15% during the time period under preview. Now, as per Ambit estimates, industry is likely to see a 7% growth in 2018 to 19 from 5% in the current fiscal. Now, besides, agriculture growth is expected to get a boost from an estimated 15% this fiscal to 4.2% in the next financial year. And one of the big initiatives for bank recapitalization program has been announced last week. But now India's largest insurer, Life Insurance Corporation of India, may be propped in to participate in 2.1 trillion rupees bank recapitalization plan. As part of the bank plan, LIC could also increase its stake in various public sector banks which are required to raise 58,000 crore rupees from capital market. Now, besides LIC, this could participate in a non-operating holding company structure to which government may transfer its share in various public sector holdings. These non-operating holding companies could then issue recapitalization bonds worth $1.35 trillion. The government is not clear on the nature of recapitalization bonds and said who will issue them would be decided in the due course. Finance Minister Arun Jaitley had last week said there were multiple options before government for recapitalization bonds and they are being examined and best ones would be explored. And staying with Indian auto world, where in a bid to increase road safety across the nation, Union government has approved a timeline for addition of safety features for cars in India. The move aims to increase road safety and curb the number of deaths in case of a road accident. Here are the details.
More than 1.5 lakh people were killed in road accidents in India last year. The number is more than any casualty due to a national disaster or terrorism. Taking note of this staggering statistic, India's Road and Transport Ministry has taken a landmark step in making cars safer. Cars manufactured after July 1, 2019 must now be equipped with all advanced security features. Airbags, seatbelt reminders, speed alert systems, reverse parking lights are just few of the systems that have to be installed in cars. All new cars will be fitted with a system that issues audio alerts when the speed crosses 80 km per hour. The alert will be sharper when the vehicle crosses 100 km per hour and will be non-stop when it crosses 120 km per hour. In addition to this, a manual override system would ensure ease of exit in case of an electric power failure, disabling the central locking feature and trapping passengers. To reduce the possibility of accidents while parking in reverse gear, a reverse parking alert will alert the driver in case there is an object in the rear monitoring range. But will these safety features help if there is no self-awareness among citizens? Road accidents kill 17 people every hour in India, and yet, despite an auto industry revolution, India does not have a vehicle crash investigation agency. NCAP, which is considered to be the worldwide authority in crash testing and road safety, gave a 0-star rating to major selling cars in India. Bureau Report, WION.
And AC restaurants in India are set to get cheaper as the group of ministers formed to make the GST composition scheme more attractive has suggested lowering tax rate for up to 1%. The GOM has proposed a flat rate of 1% for traders, manufacturers and restaurants. Currently, manufacturers pay GST at 2%, restaurants at 5% and traders at 1%. The fresh GST rate cut is expected to boost small businesses. The group of ministers has also suggested a two-pronged approach for taxation under the scheme for traders. Group of ministers, which is headed by Assam Finance Minister Himant Biswa Sarma, has also proposed to scrap tax rate distinction between AC and non-AC restaurants and tax them at flat 12%. Presently, non-AC restaurants attract 12% GST while it is 18% for air-conditioned ones. And let's go to Indian markets first. Markets in India once again are doing good as far as Sensex and Nifty are concerned. Sensex is up since morning by up to, we can say that, let's have a look at Sensex current position. It's up by 145 points. And Nifty, if we talk, it's up by 48 points. So Indian markets have resumed their bull run and it looks like we can see that trigger is going to be there as far as Indian markets are concerned. So let's see what happens over there in the Indian markets. Global markets, Nikkei, the Japanese index, is down 40 points. And Asian markets are mostly under pressure. State Times is also down by 10 points. And we are joined by our analyst for this morning, Mr. Vivek Karwa from Chennai. Good morning, Mr. Karwa. I would like to first of all ask you, what is the reason why Indian markets seem to have resumed their bull journey?
Good morning, Sumit. First of all, China market has been a bit volatile, and that's the reason Asian markets are mixed. So that's one reason why Indian markets are not, up to the level expected. Now, they are up today because there's a follow-on buying in PSU banking, which is happening, so PSBs rather. And there was a correction on Friday after the announcement of banking recapitalization. So there was some small profit taking on Friday, and now the follow-on buying is already happening. So no major reasons as such, but yes, this banking recapitalization has the potential to re-rate the whole markets in India, and hence that positive sentiment still continues, and hence we are up.
And also, Mr. Karwa, would like to again ask you, any specific sector or stock on your mind which you can recommend to our buyers?
On WION, I have been recommending PSU banking sector since very, very long, in fact, and expecting that recapitalization would happen. Now, that has been announced. Yes, there was profit booking, but this thing is not going to happen over next 2-3 days. It will take few months to follow the process. But I think as and when this thing starts happening, there is a big re-rating which is waiting to happen in PSBs, and hence stay invested in PSB banking. And then the second sector is the liquor sector, which is really doing well. In fact, last couple of weeks, other smaller companies have been doing well. And after the announcement of result on Friday, that is Thursday evening, United Spirits results was announced, and there was a huge buying. So today it is consolidating, but what I feel is on dips it would again remain a buy, because the company looks like it's turning around very, very nicely. And the regulatory issues which were present some time back are slowly fading away. So I'll be bullish on PSB, and then consumption theme as always. So these two sectors and themes look good to me.
And also global markets. What is happening over there in global markets, Mr. Karwa? What is something that is because Asian markets are mixed?
Yes, one factor of worry which should be seen by Indian market also is the rising crude prices, and hence if this crude prices continue rising, there could be impact on profitability of companies across the board. We all know crude is one critical aspect of the economy, and hence if that is going to go up further, I think there would be a negative impact, and there can be a sell-off also. So definitely Sensex and Nifty are at precarious levels, wherein one small negative news can break them down severely. So we got to be careful. Valuations are surely high. I'm not gung-ho overall and buy blindly. I'll not advise that. You got to be cautious in buying value. And then the second factor, of course, China seems to be in trouble, and particularly companies like PetroChina again seems to be in trouble, and hence that is one more issue. Now, these two issues, let us see whether they settle or not. And even the bond prices in America are rising. So that also is one negative factor. So there are a couple of negative factors. But what is happening is they are not as big as to break the market right now. And hence market is ignoring. But one negative would be crude oil. If it continues going up, I think we got to be cautious.
And also going forward, how do you see this Sensex and Nifty, especially in India? Earlier, the estimate said that Sensex could touch 35,000 mark, and Nifty could also touch, up to 12,000 very soon. So, what's your estimate? Do you think by the end of current year we will see that happening?
It is not impossible thing, I should say. And in fact, I have always been bullish on Indian markets. Overall market might look costly, but there are value buys. Now, Sensex and Nifty would continue doing well because one is lack of investment avenues by people, and hence on every dip there would be buying. And one more thing is the market is not breaking in big way. September end it tried to break, and Sensex came by almost like 1,500 points. But there is no big correction because the earnings are still quite low. Now results season has already started. Few companies have declared, few are good and few are okay. But what happens is the moment EPS picks up, the earnings picks up in, say, our market, the index would start looking cheap suddenly. So market is just waiting and hoping that earnings pick up. Now, if earnings doesn't pick up for next 1 or 2 more quarters, then there would be a problem. But I am also in the camp that yes, earnings would pick up, and hence these valuations can be justified by one school of thought, and hence remain bullish. I am cautiously bullish only right now, and having long positions only.
And gold is also up today by 0.16%, Mr. Karwa. What is reason over there, and would you suggest buying in gold at these levels?
Gold, I would suggest keep selling as and when it rises. That is like how we invest in SIPs. Small bit we keep buying when market is falling. Same way, I think gold also you should be systematically selling as and when it keeps rising. Now, one big factor of gold is the crude oil and the North Korea effect. Now, that seems to be settled, looks like. But if that crops up again, yes, gold can go up, and if crude continues going up, but there is some bearing. Both are positively correlated, and hence crude also might go up. But gold also might go up on account of crude. So I'm not bullish on them. The consumption is definitely reducing, and this Diwali season, even in India, we saw that consumption has actually fallen. So sell gold on rises, I should say. I'll definitely not buy.
Thank you, Mr. Kara, for talking to us. And as we can tell our viewers, Sensex and Nifty are touching once again record highs. As we speak, Sensex is up 161 points this morning at 33,318, while Nifty is up by 59 points at 10,300 points. So clearly, once again, Indian markets have resumed their bull run.